Joining us now, senior writer at the Financial Review, John Kehoe, for our regular chat about economics, politics and the combination of both. Let's start with the tax cuts. Are already starting to be delivered, and something Josh Frydenberg and Michael Sukkar and the Prime Minister want to make a big deal of, understandably.
Yeah, and it's been interesting to see how many people have been quickly filing their tax returns to try and get this cash into their pockets, isn't it? And obviously the Treasurer wants to sell the message to get out there and spend it. And, you know, when you combine that with 2 interest rate cuts as well, you'd have to think over the next 6 or so months that we're going to see a little bit of a lift in consumer spending and things, you know, they could turn the corner. I think maybe most economists thinking now we might have actually already been through the softest, lowest point for the economy and that things might turn around. I don't think we're expecting a massive bounce, but I think from here on, the economy could probably strengthen a little bit based on that little bit of stimulus we're seeing.
One of the interesting stashes we're seeing in the finance world has been in the Financial Review. We've seen this report from the Grattan Institute saying that superannuation guarantee going up to 12% would cost punters $30,000. Yeah. But the actual researchers have said that's not quite right.
Yeah, I mean, there's a dispute, I suppose, over how Grattan has used the Rice-Warner research to portray this. But, you know, I think it is almost beyond dispute amongst most economists that you are sacrificing an immediate pay rise, or you get a lower pay rise if you get a higher superannuation contribution, because there is a trade-off there. Now, that means at the end of the day, less take-home pay. You might end up having more in your super account at the end of the day in 30 years' time when you retire. But, I mean, as Grattan points out, actually for lower income earners, that simply just means they might get a lower pension if they have a higher super balance. So for them, the trade-off might not actually be worth it because they're foregoing income that would be really helpful to spend at the moment or buy that house or whatever. And in the end, they might not actually end up better off. As much as we always are taught to think higher super is always good, it's not always the case.
And the other component that Grattan is worried about is the tax, which is foregone because superannuation income is taxed more favourably.
Yeah, absolutely. And so there is a cost to the budget from higher super contributions because they are taxed concessionally compared to wages. I think this is an issue the Morrison Government is going to have to grapple with. We know officially they're committed to going from 9.5% to 12%, but Josh Frydenberg has flagged they are going to have a retirement income review over this course of government. And that was recommended by the Productivity Commission to happen before the SG goes up from 9.5% to 12%. I reckon watch this space because it is something the government is going to have to seriously grapple with. And I wouldn't be surprised if in the next 12 or 24 months we see the government seriously reconsidering that policy.
What, the broad superannuation
the increase
guarantee or the increase?
This is just my gut feel.
Just the increase or the whole policy?
Oh, no, I don't think they're going to ever ditch compulsory superannuation.
That would be quite
I mean, there are some people in the
some that want it.
Some people in the Liberal Party don't believe in the compulsion of it. But I think that would be a bridge too far. It would be interesting to see where they land on the ultimate increase from 9.5% to 12%.
One of the things that we've ended up talking about, which has surprised some, is deeming rates. It's become such a big topic when we all thought we were going to be talking about negative gearing and franking credits. But do you think we're going to be getting a decision anytime soon, or is this something that the government's going to want to kick the can down the road a bit? Yeah, well, I suppose if they kick it down the road a bit, maybe they save a little bit of money by not implementing it as quickly. But I mean, the political impetus is there for them to do something. It's been a pretty effective lobbying campaign, you've got to say, by some of those pensioner groups, from some of these part pensioners who are missing out because they're not getting much of a cash interest rate return on their cash. So, I mean, I think the political impetus would be there to nip it in the bud and get it done sooner rather than later and then move on.
The financial regulators seeing a bit of a stabilisation in the housing market. I think that's reflected as well in the clearance rates at the best in 14 months.
Yeah, so the Council of Financial Regulators has released a statement just this morning. I filed a story online for the Financial Review. So the Reserve Bank of Australia, the Australian Prudential Regulation Authority, ASIC as well as Treasury, and basically saying that house prices seem to be stabilising in Sydney and Melbourne, auction clearance rates and credit growth as well. So there are some signs, I think, post the election, the RBA interest rate cuts as well, that things are levelling off there. I don't think we're going to get back to record house price growth like we were seeing a few years ago.
Yeah, but
it does seem like things have stabilised. That's good news.
And with the rate cuts, income tax cuts, we might, as you say, have a little brighter period ahead. Thank you, John Kehoe, senior writer at the AFR. We'll talk to you next week.